What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I bought 5 dividend stocks today, and I'm going to reveal to you my plans with these dividend stocks. I'm going to kind of reflect on my dividend stock buys, and I'm still going to consider buying more TSLY ETF each month for passive income. So I'm going to do a stock analysis and dividend stock analysis on these dividend stocks as well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these dividend stock buys out right now. So the first dividend stock I went after today was Kroger. It's sitting at $47.35. I'm going to do part 2 with their review on why I bought these guys possibly next week. So they have a dividend yield of 2.45%, a PE ratio of 13.61. The average volume is 5.96 million. Market cap is $33.99 billion US dollars. Its year range is $41.82 to $52. Day range is $47.24 to $47.65. And its previous close is $47.18. By the way, in the past 5 years, which is very attractive, it's beating the S&P. Now let's go over their revenue and dividend history trends. I went over this about 2 weeks ago, but I really like the revenue trends with Kroger, which increases my confidence in buying these guys as a dividend stock. 2017, this is annual revenue in millions US dollars, 115, 2018, 123, 2019 a little bit down, 121, 2020 it was up 122, that was in the middle of the pandemic, 2021 is 132, 2022 is 137, and again, $137,888 in annual revenue in millions US dollars. And then 2023, 148. So you're seeing a huge increase in revenue, which attracts me even more to buying more shares. Now I'm going to jump to their dividend history. Now again, with this dividend growth, it's very attractive. I'm going to start in 2011. It was 11 cents, 2012, 12 cents, 2015 cents, 2013, 17 cents, 2014, 19 cents, 2015, 21 cents, and then you see a stock split right here. I'm pretty sure I went over that before in part 1. 2015, 11 cents, 2016, 12 cents, 2017, 13 cents, 2018, 14 cents, and you get a little special dividend at 46 cents. 14 cents, 2019, 16 cents, 2020, 18 cents, 2021, 21 cents, and then they jumped to 26 cents in 2022, and 2023 they jumped to 29 cents. They have a low payout ratio of 24%. That's very attractive to me. Dividend increases in the last 5 years is 6. Dividend growth in 5 years is 15.79%. So if you bought one share, you made 104 with a 2.20% dividend yield. Don't forget they have a stock split history, which also attracts me to these guys as a dividend stock. Now let's jump to the next dividend stock. What is my favorite phrase for like buying these bank stocks and financial sector stocks? Take it to the bank. Sitting at $26.55, Third Bancorp. Dividend yield of 4.97%. Symbol is FITB, by the way. PE ratio of 7.70. Average volume 5.73 million. Market cap 18.06 billion US dollars. Its year range is 2211 to 3806. Day range is 2639 to 2682. And its previous close was 2675. So I like the regional bank stocks. I like the bigger bank stocks. These guys are a big one. By the way, Key Corp right here, 952. I have more than 400 shares in these guys. That may be an attractive dividend stock for me to consider again buying. But again, right now I'm focusing on M1 Finance, dollar cost averaging, 500 a week, and then throwing 125 into my IRA. Now I'm going to jump to their revenue and dividend history. So now they're starting to get over that hump. This is annually in millions US dollars. 2016, 6,889. 2017, 7,713. 2018, 7,973. 2019, 9,790. 2020, 8,402. 2021, 8,329. And 2022, 9,353. So annually in millions US dollars, it has improved. Now I'm going to jump to its dividend history. I'm going to start in 2011. It was 6 cents, 12, 8 cents. This is a quarterly dividend stock, to 10 cents. 2013, 11 cents to 12 cents. 2014, 13 cents is a little stagnant. Then 2017, it jumped to 14 cents to 16 cents in 2018, to 18 cents in 2018, 22 cents in 2019, 24 cents in 2019, 2020, 27 cents, 2021, 30 cents, 2022 jumped to 33 cents. So they have a low payout ratio, which is attractive at 37%. Number of dividend increases in the last 5 years is 5. The dividend growth in 5 years is 10.89%. I like that. So if you bought one share, you made 132 with a 4.95% dividend yield. Now, let's jump to the next dividend stock. Next stock I bought was Starbucks. I bought some shares, sitting at 98.37, a dividend yield of 2.16%, a PE ratio of 31.83, average volume 7.14 million. The market cap is 112.58 billion US dollars. Year range is 75.73 to 115.48. Day range was 96.23 to 98.78. And its previous close was 96.05. These guys are on a terror, and they are destroying the S&P in the past 5 years. This is what I like about Starbucks. One, they're destroying the S&P the past 5 years. Price per share has gone up. Their revenue has gone up. They have an extensive stock split history. And I'm going to go over the revenue trends and dividend history trends, which is even more attractive. So this is annually in millions US dollars. 2016, 21,000. 2017, 22,000. 2018, 24,000. 2019, 26,000. 2020, 23,000. So a little bit of the dip, but guess what? 2021, 29,000. 2022, 32,000. So annually in millions US dollars, they have increased their revenue significantly, which is very attractive. Now let's jump to their dividend history. Now, with an extensive stock split history and an extensive dividend hike history, this is what makes me really attractive to these guys, and I'm buying more shares. So 2011 it was 13 cents to 17 cents. Then 2012 it was 21 cents. 2013 it was 26 cents, 32 cents, and then you see the stock split right around 2014, 2015, which is 16 cents to 20 cents, and then they jumped to 25 cents. 2017 to 30 cents, 2018 36 cents to 41 cents, 2020 45 cents, 2021 49 cents, then they jumped to 53 cents in 2023. So their payout ratio is a little bit high. I'm not too worried. I see Starbucks busy all the time. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 9.68%. That's not bad. So if you bought one share, you made 212 with a 2.21% dividend yield. So the thing is, in the long run, a lot of these dividend growth stocks, I love TSLY. This is something that I may implement in M1 Finance and E-Trade. I'm telling you, if it looks good one more month for TSLY, I'm in. I'm going to be buying more shares. I may use my YouTube dividend, my YouTube income, and start buying TSLY either on M1 Finance individually or E-Trade individually, and really starting to build that up and then start buying more shares, because the thing is, I can use the TSLY income to buy stocks like these, and that's what the long-term strategy is potentially with TSLY and these other covered call ETFs. I don't completely want to rely on TSLY for passive income. One, it has a expense ratio of like almost 1%. But the other thing is, I can buy shares like this, and eventually stocks like these will overcome the income of TSLY in the next 10 to 15 years. And it's looking at these trends, that's highly possible, especially with really good dividend growth stocks like this. Now let's jump to the next dividend stock. Next one I bought was Kinder Morgan. I bought some shares of these guys. They're sitting at $16.95. A dividend yield of 6.67%, a PE ratio of 15. Average volume 14.16. The market cap is 37.99 billion US dollars. Year range was $16 to 1936. This is one that is not beating the S&P. Don't expect it to beat the S&P. Year range is 16 to 1936. Day range is 1679 to 1705. And its previous close was 1692. Now let's check these guys out. Here's their revenue annually in millions US dollars. 2016, 13,058. 2017, 13,705. 2018, 14,144. 2019, 13,209. 2020, a significant dip, 11,700. 2021, 16,610. And 2022, 19,200. So there is a huge increase in revenue. It's very attractive, and this is a high yield dividend stock. I'm going to jump to their dividend history. So I'm going to start 2016. It was 13 cents, 2018 20 cents, 2019 25 cents, 2020 26 cents, 2021 27 cents, and 2022 28 cents. So it does have a high payout ratio. That's one thing to be aware of. Okay? This one, I wouldn't completely rely on it as a dividend growth stock, but reading some information about these guys, I still feel pretty confident about these guys as a company. The dividend increase in the last 5 years is 5. Dividend growth in 5 years is 6.52%. They are increasing their revenue, which has me still attracted to these guys. If you bought one share, you made 113 with a 6.68% dividend yield. Now I'm going to jump to the final dividend stock. And another one, take it to the bank. Bank OZK, sitting at 40.09 with a dividend yield of 3.59%, a PE ratio of 8.13. Average volume 1.43 million. The market cap is 5.16 billion US dollars. G range is 30.72 to 49.52. Its day range is 39.56 to 40.65, and its previous close is 39.76. I just went over these guys. I'm very attracted to these guys, and this is why I'm buying more shares. So I'm going to jump to their revenue and dividend history. So here's their revenue annually in millions US dollars. 2016, 764, 2017, 1,056, 2018, 1,208, 2019, 1,270, 2020, a huge dip, 1,185, 2021, 1,186, and 2022, 1,380. So there is a huge increase from 2016 to 2022. Now let's jump to their dividend history. So I'm going to start 2018, it was 20 cents to 21 cents, 2019, 22 cents, 23 cents, 2019, 24 cents, 25 cents, 2020, 26 cents, to 27 cents in 2020. 2020 is 28 cents to 29 cents in 2021. I can't even keep up because they're hiking their dividend so much. 2022 is 30 cents to 31 cents to 32 cents to 33 cents, and then 2023 it was 34 cents, 35 cents, and 36 cents. They have a payout ratio of 28%. Number of dividend increases in the last 5 years is 21. Dividend growth in 5 years is 11.03%. So if you have one share, you made 140 with a 3.52% dividend yield. Now let's jump to how many shares I bought total. So every week I throw in $500. I've been consistently throwing in $500 a week with a lot of these dividend stocks. So for Kroger, I bought a total of almost one share, 0.99 shares at a value of $47.49. Fifth Third Bank, I bought a total of 5 shares, sitting at, and the share price was $26.57. I threw a total of $147.31 into that. Starbucks, I bought a little bit more than half a share at $65.44, so the share price was $98.02 when I made the buy. Kinder Morgan, I bought a total of 5 shares, a value of $98.33, and the share price was $16.89. Bank OZK, I bought a total of 3.54 shares with a value of $141.42 with a share price of $39.86. Now I'm going to jump to my portfolio real quick. And Right now I'm at $66,929.98. So really the big thing is with all these shares, specifically, let me go over OZK. I'm at distributions at 3%. I only have 26.98 shares. I really need to get up there with these guys. That's the one I'm really kind of targeting. And another one that needs a little bit more attention is Premier Financial Corp. I have 43 shares. It's a high yield dividend stock. I'm paying a little bit more attention and closely watching these guys. So I'm going to probably do a video on these guys eventually, but these guys are pretty hot right now. We got to check out the financial earnings a little bit. This is why I'm closely watching them. But another one that I'm really kind of targeting is Wendy's. So I have 40 shares of these guys. Again, this is a good dividend growth stock right now. And I'm very excited to see these guys grow. I only made $4.74 in dividends, which is not a lot. But, if I get more shares, that's a different story. So if you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to have a video for you tomorrow, and I'm going to make sure it's done before my clinical rotation starts. It's on dividend stocks, and I'm closely watching. Some of them I sold, and some of them are high yield dividend stocks that I'm just really keeping an eye on to see if I should put the finger on the trigger. I don't own any of those shares. I just want to make it clear. So you guys take care and have a great Monday. So as a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.